May I remind you that trading is risky and not suitable for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Welcome to the first session on QuantBox. Oh man, I'm super excited. So today we're going to go through this amazing new tool that's been provided to you by Wayne McDonald. And wow, man. Quant-in-a-Box. I'm super excited about this. I'm a technical trader. I've been a technical trader for 7 years and really honing in on my technical skills for the last 4 years. Very much feel like I've got a master's degree in technical analysis. And when I say study technicals, I mean really study technicals, candle by candle, 16 hours a day, last 4 years. I'm really good at the technical stuff. But the thing is that sometimes it's nice to have fundamentals, not sometimes. It's nice to have fundamentals to back your view on what you're doing in the market. The difficult thing is, how do you follow that path? I think if we look at the giants that came before us and that are currently leading our team, you know, look at Wayne. What has he done? Well, he went to Harvard. He got educated. He spent a lot of money, a lot of time learning how to do this really complicated quantitative analysis and fundamental analysis. And the thing for me was like, well, if I really want to get good at it, that's the path I got to follow. And my decision was, well, I'll go into technicals then. I'll study technicals and I'll understand that 100%. And hopefully I'll find myself in a team with a quant, and then the quant can provide me with the beta and the alpha, and I can then go and confirm it on the chart technically. Then QuantBox. And what is QuantBox? QuantBox is exactly as it says. It's a quantitative analyst in a box, right? Pretty cool. So this is the website, quantbox.co, where you can sign up and join and gain access to this amazing tool over here. This is the QuantBox tool, okay? So right now it's sitting in Google Data Studio, which is totally cool. And we are busy working on plans to put this into a different app, but that's to come in the future. In the meantime, look at this dashboard. Isn't it amazing? Like, everything at a click of a button. What's cool about this is that if I don't understand, well, first of all, let's just look at the information that's available, right? The seasonality right over here in front of me, the fundamental analysis for the euro dollar, broken down to the euro and the dollar, GDP growth, inflation, unemployment, interest rates. What's cool is it's scoring this data and it's giving me a total score and a bias of what to do with euro dollar, which is super cool. I then look at sentiment, retail sentiment. So 54% of retail traders are long in the euro dollar, 46% are short. We then look at upcoming news. This information is right here in front of me. There's no more Googling, having multiple sites, trying to find a reliable site for seasonality, which is really challenging and difficult. We've also got some technical stuff as well, which is really nice, off the daily time frame, telling you like sort of what the general target is, right? We'll get into technicals in a moment. Target ideas, midterm, long-term, short-term. Here's a breakdown of your score summary. I mean, look at how amazing this is. Score -6 on euro dollar, strong sell. COT data, -1. Yeah, you get COT data. Look at this. This is a retail sentiment, retail traders, COT data. Look at that information right here at your fingertips. Wow, man. Smart money tracker. Look at that. Isn't that cool? Isn't that really cool? Beautifully presented. Wow, I'm super impressed by this. I really am super impressed by this. So what we're going to do is we'll go through the dollar pairs and the yen pairs, okay? And we'll look at this. We'll look at what we're looking to do from a fundamental perspective, and then we'll go and confirm this technically. Now, some of this stuff won't be news to us because, you know, you've been selling euro dollar since last year, June. But you want to know, should you continue selling euro dollar? Okay, so we can see here, so as far as QuantBox is concerned, we've got a very strong sell on euro dollar, and it breaks it down, right? From a fundamental perspective, inflation, unemployment, interest rates, all scoring us -1 for each. GDP growth, getting a little green over there. Trend reading -2, seasonality -1, retail sentiment 0. And that's because we're pretty much neutral on the retail sentiment. We got 54% long, 46% short, okay? And then COT data, -1, total score of -6. Look at this beautiful summary that it gives you over here. Look at this beautiful summary. Isn't that cool? Wow, man. So now I'm in a fortuitous position where I've spent the last 4 years. Okay, I've been trading for 7 years, but I really spent the first 3 years were a rough ride. Okay, I thought I could just trade without really knowing how to trade. I thought I'd learn as I go along, like many people do, figure it out as you go along. School of hard knocks. And then I stopped after 3 years and I said, wait, let's really hone in. Let's understand process. Let's understand methodology. Let's build control. Let's build consistency. Let's build confidence. Only technically. Then realizing there was something missing, fundamentals, you need it, you have to have it, but how do you get it? QuantBox. This is absolutely beautiful. I don't need to do the math that goes into these calculations, right? And knowing that Wayne is behind this project means that data is accurate. Data is accurate. I'm very excited about this. So here's euro dollar, strong sell. And we take a look at our euro dollar on a chart. Let's jump into it. Okay. And cool. So we can see there, right? I mean, as I said, you've been selling euro dollar since last year, June. Okay. You got in all the way up here. And you've been riding it down the entire time. Look at that beautiful trend, right? Setting up so nicely last year. We ranged for 6 months and then a beautiful lower low, lower high, and then suddenly blah, 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 lots and lots of pips. Here we are down here, right? Now, people are going to start getting itchy and saying, oh, it's time to buy, it's time to buy, it's time to buy. Look at those retail traders, like 54% long. Where are they getting long? Are they buying lower lows? So we want to match fundamentals with technicals. Looking at this chart, do you see any reason for this to be bullish long term? I don't see any reason. I'm zooming out as far as I can. I don't see bottom of range anywhere, right? Super, super low. Okay, breaking the monthly S2 last month. Naturally, what do we expect? Well, price to come up to the central 21 EMA and then continue down into the next target, right? So the daily time frame doesn't say anything about long-term bullishness. I don't see any higher high or higher low. I don't see a break of resistance. I don't see price consolidating, closing at the bottom of a range, breaking out of the range, coming back down top of the range, and then heading up. None of that. So for me, daily time frame technically still bearish. But does that mean I can just sell it over here? Not necessarily. I need some resistance, right? Central pivot point, 21 EMA, a roll reversal, they'll do. So looking at the H4 time frame, we can see here, do I have any indication for bullishness? I do not. Like long-term bullishness, no. I don't see any area where price is broken, bearish market integrity, and that integrity has become support. So i.e., first of all, this is not a double bottom, okay? If you know your moving average theory from FX Bootcamp, you'll know price comes up, hits a 55, comes down, double bottoms. Look at how this low is lower than this low. That's a really odd double bottom. Also, like, why not come up to the 55, come back down, make a double bottom, make a higher high, make a higher low, 1, 2, 3 reversal pattern, off we go. That's not really what's happened, right? We came down, we consolidated, we came down lower, price breaks up. Notice how we break that support, okay? We then come above that resistance. And now we're fiddling around with these wicks over here. No. Still bearish for me. So you can see we've got a weekly M3 in play at the moment. Beautiful pivot point to get short. And that's got a target of the M1. I just don't know if you can change my template here. Okay. Target of the M1 and our S2. Monthly M1's over there. Monthly S2 is down there, right? We would like to see price reversing at an S2 because that is a reversal pivot. We noticed that last month we broke below that pivot point. We've now come up. Okay. So I'm looking for an opportunity to sell this, and I'm paying attention to resistance. I mean, you got central pivot point, 21 EMA, roll reversals. You got weekly M3, confluence with monthly pivot point. There's a whole bunch of stuff going on here. Some resistance left-hand side. Okay, cool. What about the 2155? What about the 2155? Okay, I don't see any higher highs here yet. Okay, certainly interesting that price, these candles here break this resistance, and these kind of candles come back down below this, resistance. Seems odd, right? So I'd certainly be looking at market opens, confirming trades at resistance, and you know, technically confirming an opportunity to short euro dollar further. Okay. One thing I am aware of, and this is what's nice about QuantBox now, because now what we can do is we can start saying, well, technically, I know that S2, monthly S2, if my plan was to take this down to the monthly S2, I would expect to see, if I see a reversal, I'd expect to see it at a monthly S2, okay? Or a monthly R2. All right, you can see there's a bit of a reversal over there. So at the start of the entire thing, that was 2020 December, right? But nonetheless, so this entire thing turning around at an S2, a reversal pivot, somewhere in a profit-taking zone, somewhere where all these bears can get out, right? Because that's the only way this goes up, is if bears get out, and then when bears get out, less bears get in, and more bulls get in, and suddenly, boom, we're bullish. Now, how do we represent that in the charts? Well, technically, you're going to see some kind of bullishness, right? Remember, there's no higher lows in a bearish trend. There are no higher lows in this chart yet. So what we can then say is, right, if we're coming down to an S2, if everything works out and we get the resistance we're looking for and price continues going down, and again, we have no reason to believe that we're going to suddenly become long-term bullish, okay? We have to confirm our bearishness with use an M15 chart, an M5 chart, or use H4 bias candles combined with the market open bias candle and H1, however you do it. Once you've confirmed bearishness, the question is, well, where are you going? Where are you taking it? Well, you're taking it down to a profit-taking zone. Are you doing that from a weekly perspective because of the M3, or are you playing monthly pivot points because of the monthly central? Either way, when you get down to that level and you're thinking to yourself, is it time to take profit on all my euro dollar sells? Is it time to start getting long on euro dollar? Scratching the head, trying to figure it out. What am I looking for? And even though you might be looking for certain things technically, you still haven't got that confidence of knowing that something has changed fundamentally. Well, again, QuantBox. Here's where you can see, has something changed? Has data started changing on the euro dollar? Have institutional positions changed on the euro dollar? Has retail sentiment changed? I mean, I'm not really going to base my bias on what retail traders are doing, more to like where the divergence comes from in retail sentiment. But institutional traders, COT reports, has that changed, right? Have we seen any change to fundamental data in either the dollar or the euro? Have we seen a change in sentiment from any of the central banks, right? Beautiful information right here. So we can start looking at fundamentals leading technicals, and then we can say to ourselves, okay, well, technically, I'm currently at a place where I'd like to take profits. Do I see any change in fundamentals? Beautiful, go hand in hand, right? Very exciting stuff. So that's euro dollar for me, waiting for that resistance. Again, central pivot point, 21 EMA, roll reversal, weekly M3. I mean, what else could you want, right? What else could you want? And fundamentals backing that, that view. Taking a look at pound dollar, we can see here, again, just absolutely gorgeous. Look at that, one click of a button and everything at your fingertips. And there's so much more to go through here. And there's so many more pairs. There's bonds, commodities, global stocks, indices, cross-currency pairs. Look at this list. Look at this list, guys. It's just absolutely gorgeous. So everything we're looking at on the majors, you're getting on every other currency. It's really, really stunning. And the amount of work that's gone into the back end and putting this together, the fact that you can have it in your fingertips. I just love the fact that everything's on one page. That to me is just music to my ears. All right, so pound dollar is a sell as well, so still bearish. You can see here -5 score, COT -2, retail sentiment 0. So that's because of the neutrality between long and short. And then we've got seasonality, trend trading, GDP growth, inflation, unemployment, interest rates. All right, so beautiful spread and valuation now. Beautiful spread amongst those data points, totaling a -5. And again, you got this beautiful paragraph down here describing exactly what's going on. The kind of thing you would type out if you were doing this yourself. You know, if you were working in a hedge fund, or if you were working for Wayne and he said, right, so give me a summary on the pound dollar, you'd have to go and get all this information, score all this information, put all this information together in a matrix, and then type up a summary to say, all right, well, this is my view on pound dollar. How long would that take you? You'd spend the entire weekend doing that, right? And you'd have to do it every single weekend. Oh, man. this feels like I'm cheating. So, all right, cool. A little favorable advantage. So you can see pound dollar sell. I'm totally cool with that. I don't see why not. I mean, we've been selling it for ages now. You know, again, since last year, June, you've been short on pound dollar, right? Making plenty of pips. Now we got pound dollar saying, okay, so continue selling. Well, what do we have? I don't see any reason why we're suddenly bullish in the daily time frame. I don't see any reversal patterns, any break of resistance, any resistance becoming support, none of that. We're above a monthly central, okay, but we are still in the sell zone. We've got the monthly M3 over there. We got a daily 21 over there, okay, pretty cool. Roll reversals, we got some over there. Okay, great. H4, do we have any indication of this being bullish H4? Where's the reversal pattern? I don't see it. I don't see a double bottom. I see this really weird consolidation. Price came down, then price came up, and then price came up. So I have to definitely confirm bearishness. But like, what's interesting is look at how these candles come straight up into this resistance over here. We're so bullish, we closed the resistance. We came down, consolidation, weekly M3 over here. I mean, you got, let's just let me clarify this chart quickly. Okay, cool. Where is my, there's monthly M3. I'm off coming off monthly central pivot point. Okay, fine. So plenty of resistance in this place, but I'm very specifically that daily 21. Delicious, delicious, delicious. Okay, again, targeting down here. If you're doing a monthly pivot point play, notice how last month we broke below that S2. Now, of course, could be an indication that this entire thing turns around, but once again, you don't need to guess. Has anything changed fundamentally? Now, of course, we realize that your fundamentals don't have to change for price to go up because we have got profit taking that can take place. So that's why you have to confirm the bearishness. How do you do that? Well, it's very simple. Pick your resistance. If price is at resistance, look for an indication. In order for price to get to resistance, you can see green candles, green candles, green candles, green candles, right? So it's really easy. If you find price at resistance, like this M3, for example, if you're looking at this candle here, this 8 o'clock candle, so then you're waiting for that candle to close. Once that candle closes, you know, you then verifying that candle low time frame. Or alternatively, you're still waiting for this candle to close. When this candle closes in a couple of hours, you're then saying, okay, great, I got that candle closing. Now you're going into H1 and you're looking for that lower low, lower high, or a close at resistance. You know, you can see there, look at that roll reversal over there. Okay. So obviously you'd wait for that 4-hour candle to close. Alternatively, you see this close at resistance over here on the H1 time frame, and you look at an M5 or M15, you're looking for that lower low, lower high. Price action, stock standard, nothing complicated, right? But what's nice is that you've got the confidence of knowing that fundamentally pound dollar is bearish, which means you're not going to suddenly start saying, oh, I wonder if I'm going to buy or sell. If I see bullishness, I'll buy. If I see bearishness, I'll sell. You know, there's a saying that says that, you know, if you stand for nothing, you'll fall for anything, right? So in this situation, you now know you have a bias on pound dollar and it's bearish, right? No more flipping coins. No more wondering if your bias is correct. You just open up your QuantBox, you can see that I'm going to sell, and you then look for opportunities to sell, right? You're looking for that resistance. And I just see lots of red up here from a daily pivot point perspective, an M3 on the H4, 21 on the daily. Wow, beautiful. Okay, fantastic. You can then start looking at targets in terms of like where price is headed, short term, medium term, long term. And you can start linking that up with your various technical indicators like your pivot points, etc. Okay, let's take a look here. So long term 04234, 04234 gets us somewhere down here, sort of in this area. 04, yeah, sort of monthly S1 vibes. Okay. That's cool. So by the time you're down there, if that is the view long term, short term, we've got 1019. 1019. So 1019, we're coming in down here, sort of close to M1, right? Beautiful. And you can start linking that up with regards to your pivot points and seeing, well, you know, Do you put alerts down so when price gets to the M1, you can then take a look and see, do you get out? Do you just place your take profit over there? Are you aggressive and getting down off at the S2? This is a bearish trend. S2 makes sense. Are you going 50-50? You can start planning your stuff out properly, right? Not just thinking about how you're going to enter the trade, but also thinking about how you're going to exit that trade and manage that trade. Very cool, sophisticated stuff. All right, great. So we got that. Let's take a look at the next one. I'm going to leave you dollar yen and dollar Swiss. I don't like to match funding currencies with funding currencies. Dollar CAD, cool, dead keen. Let's go. All right, so buy. Well, obviously, not surprised. Look at that technical indicator. Okay, again, verify this. You know, don't just go and buy because it says so. This is you'd never be in a situation where you sit at a table in a hedge fund and the quant says you're going to buy USDCAD and the technical guy goes and just presses a button. There's a reason why you have skilled technical analysts, because they're able to say, okay, I hear that you want to buy the dollar CAD, but maybe right now we're not in the best spot to do so. Okay. And when you take a look at your charts and you realize that you've opened up at a monthly M3, you're very, very far above the monthly targets. You've opened up at a monthly M3 and you're now going to buy up here. No, not a good idea, right? What you'd rather do is let price come down to central, to 21. You need support, okay? You can see here, if we just change my template quickly. You can see our M1 is all the way down. The central, sorry, it's all the way down to the M1. So this week could be an M3 to M1. And then price could find itself here. Next week, it could continue going up. Totally possible, okay? Don't be surprised you see profit taking up here. It makes sense that it happens. Ultimately, you're looking fundamentally to buy dollar CAD, and you know for a fact this ain't the place where you're going to be doing it, right? Beautiful. Does that mean you could take a short-term sell, profit taking? Yeah, sure. If you confirm bearishness, why not? Right? And only because of the fact we're so far above profit taking zones, you realize one of the FX bootcamp plays is come off the M3. Remember, Wayne's only time when he counter trend trades, right? His only situation when he counter trend trades is when price is above profit taking zones, he takes down to the central. So if that was you last night at Asia, or this morning at Asia, then bravo, that makes sense, right? It's a play that makes sense, totally. You got the confluence of the, have I changed this template now? You got the confluence of, where's my, okay, there's the M3, monthly M3 and weekly M3 confluence. Okay, beautiful. And all you need then is just confirming that lower low, lower high. And you can do that in a 5-minute chart, or you're doing it on a H1 chart, whatever the case may be. Has it happened yet? Not too sure. Look for it. Not going to go to the depth of technicals in this session, but definitely confirming that. You know for a fact that, you know, sitting over here, you look at your weekly pivots, you might be like, oh, weekly central, buy off that. I don't think so. I would prefer to be buying down here somewhere, 21 EMA, a little bit lower down, okay? At least let some of the air out of the tire before you reinflate it, or it might pop. Right, but the nice thing is, you can look at this chart and say, well, I don't have any indication for long-term bearishness on USD-CAD. I don't see any break of support becoming resistance, lower low, lower high on the daily. I don't see any lower low, lower high on the H4 either. Okay, there's no like sort of move like this. Right now, we've basically got price sitting over here. Okay, cool. This is still bullish. Might be consolidating, but long-term still bullish, right? Nothing says bearish yet. Okay, so it's let profit taking take place, and then maybe pick this up later in the week. Okay, which is really, really great. So either your bias fundamentally keeps you out of a trade right now, okay, and you're waiting for price to come down to support, which is beautiful, because it means you're not losing money. You're not buying where you shouldn't buy. You're forced to look for support because you've got a bias now. Buy dollar CAD, okay, buy dollar CAD at support. Am I at support? No, I'm not. Look for support. Wait for support. Alternatively, if I'm not at support right now, price is so far extended beyond profit-taking zones, can I take profit? Can I trade the profit-taking? Sure. If you can verify technically, why not? Okay. Then Aussie USD, okay. Surprise, surprise. We got some sells. Okay, cool. Same thing though. You definitely want to verify that. Okay, because look at that. Look where the price is right now. So far below the profit-taking zone. Where's your resistance? Central, 21, M3. Roll reversals all the way up here. Okay. H4, do you see any indication that this is long-term bullish? No, you do not. Would I sell at a 4-hour 21? No, I would not. Why? Because you can see how the structure of this trend has changed. This is now sideways. Be careful of using moving averages in a sideways market. Doesn't make sense, right? While this is still long-term bearish, right now, you can see momentum is low, okay? We stopped making lower lows. We are now currently ranging. You don't use moving averages in a range. So I wouldn't sell at 21 EMA. I wouldn't sell at the M3. I wouldn't buy it. Well, I mean, would I buy at the M2? I suppose I could, because if you're looking at this from a perspective of saying, I'm looking to take profits, well, at least trade the taking profit, take it up to the central or the 21 or the M3. Yeah, that makes sense. Just make sure you can confirm that bullishness on a lower time frame chart, okay? Or wait for a better level of resistance, and then you could potentially get short, okay? Also, confluence of monthly pivot point with weekly M4. Interesting. Opened up at in a buy zone this week, all right? Cool. Obviously, going up might be a bit more challenging than going down because of the fact that this is bearish, but you'll use your discretion. Let's take a look at Kiwi dollar USD. Okay. Oh, isn't that gorgeous? Just click a button, everything's there. So Kiwi dollar USD bias is sell. Okay. Let's take a look. It's the same as the other ones. All right. Also, very far extended below profit taking zone. And resistance central, M3, 21 EMA. Look at that 4-hour chart. Would not be selling at the 21 EMA right now. You can see we've broken trend structure. Okay, we've stopped making lower lows, and so currently ranging 21 EMA, useless in a range. Okay, could you be trading this up? You certainly could be, but you need to confirm that. Make sure you're confirming that lower time frame. Okay, fantastic. Also, notice how dollar CAD, Aussie dollar USD, and Kiwi dollar all have monthly pivot point confluence with weekly targets. Dun, dun, dun. And they're all opened up in weekly M2 areas. Again, your fundamental bias is long-term. You could be short-term long on Kiwi dollar. If you verify it, make sure you verify it. If you can't verify it, you leave it alone. Okay, everything has to be verified, lower time frame. Whether that lower time frame is H1 or M15 or M5, whatever tactics you follow, ultimately, you're always doing the same thing. You're looking for, if you're looking to buy Kiwi dollar, you're looking for a higher high, higher low somewhere, whatever time frame that might be on. Okay, you're looking for a higher high, higher low somewhere, and you're then getting in and you know managing your stop and trying to take it up to a level where there might be higher resistance. Okay, or you're sitting back and saying, sorry, I can't go against my fundamental bias. I am a bear on Kiwi dollar based on the following reasons. And you say, there they are. Look at that. You now have reasons as to why you are bearish on the Kiwi dollar. You can say inflation. Okay, well, these have all gotten little green marks, which is interesting. Are there changes coming through? We're starting to observe. Okay. Interest rates, though. Okay, cool. Maybe this is going to lead to a change over there. All right. You can see that retail sentiment 78 long, 22 short. Interesting. My question is, where are they buying? How are they buying this? I wouldn't be long-term long unless I had a higher high, higher low. You wouldn't catch me long-term long until it's a higher high, higher low. I need a reversal pattern. I need a higher high. I need a higher low. I need some indication that this trend is over. Look at that beautiful spread of news, just gorgeous. All right, cool. So you've got breakdown of your reasons, okay? And you can see COT data is interesting. So you got a breakdown of your reasons. You go into your charts and you exercise those reasons. So you might decide, no, sorry, I'm a bear for the following reasons, and you have them now. And I'm going to sell this at resistance, and I see resistance at a monthly central, monthly M3, daily 21, weekly M4. I mean, you could go weekly M3, but again, look at how you're still going to be inside that M2, M central pivot point buy zone on the monthly pivots, right? What I like about this central is it's right over there. It's in position weekly. Okay, you want to match that up. Don't trade out of position unless you're in a very, very fast moving trend, right? You can see over there, trading out of position, fast moving trend. over here, fast moving trend, right? Down here, suddenly, oh, momentum has slowed down. Okay. All right, groovy. So we'll have a look at those. Tomorrow, we'll take a look at the yen pairs. Get yourself this tool, guys. It's really, really cool. And the stuff that's on here, you got your crosses, your yens. Like, it's just absolutely awesome. And the information you got over here in terms of retail sim price, forecast, market heat map, fundamental analysis, it's like, it's insane. At the touch of a button. I've been waiting for it. I had no idea I was waiting for a tool like this. I never thought of combining everything. You got certain tools out there that are very helpful. Okay. Trading economics is very helpful, but it doesn't give you this. Okay, it just gives you the data, taking that data, putting it together, and then having that information at your fingertips, but also providing an analysis of that information. It's really, really cool. And I'm looking forward to what we're going to do with this in terms of putting this into its own app with notifications and measuring the change of data. Very exciting stuff. So QuantBox.co. And I look forward to seeing you guys tomorrow. Good luck in the market today.